Amazon stock. Amazon stock has been on fire ever since November, but this is many stocks. Certainly, Amazon stock has shot up recently, along with the slide lower in interest rates. But is Amazon stock a good buy now? I'm a value investor and I break things down looking at its actual value. There's some speculation baked into Amazon, but it's a little too high when you break down the figures and you ask the question, is Amazon stock a good buy now? Let's jump in and I'll show you the charts that I'm looking at. If you're just finding my channel for the first time, thanks so much for stopping by. I am an economist and value investor, and I break down the economy first and foremost. Then I ask, what are the valuations of certain companies and how will they perform inside any kind of economy? Taking a look at Amazon, Amazon stock actually came into conversation with me and someone else just last night, actually. And I had looked at them just a couple months ago on their latest earnings release, and I wanted to look at Amazon stock once again just to kind of reiterate what I was thinking. Now, said individual has acquired Amazon stock a long time ago. My advice to her was hold on till you die. That and, of course, Apple. Regardless of the speculative nature of Amazon stock right now, where it could be, if you're in from really low levels, you don't really care. Nonetheless, is Amazon stock a good buy? At this point, we're looking at the latest. This is the 4-hour bar chart on Amazon, AMZN. Amazon stock, AMZN is the ticker symbol. Let's break down their latest quarterly revenues, 143.1. You go backwards and you compare quarter over quarter, then year over year. There are some cyclical nature to a lot of these things. Q4, we should see some decent numbers in Q4 because that's the shopping season here, and they haven't quite reported that. And hopefully, Amazon will clear that 149.2 level for revenue for next quarter. Projected revenues for the year 2024, 636.3 billion is 2024's projected revenue. 2025, about 700 billion. I had to inch those up since the last time I looked at Amazon, just a smidge. So analysts do expect we move forward. Okay, is that reality? What's happening with the economy? We're seeing some movements higher in unemployment. That will affect companies across the board as we see personal incomes and personal consumption contract more and more. Personal incomes, this is the total amount of dollars earned inside the United States by individuals. It's starting to slow down, maybe just a little bit. Businesses are starting to notice though. I just put out a video on Walmart, Walmart stock has been selling off. And the CEO and other management were saying, we're seeing it. Walmart's sort of down, their customer might be down a little lower on the income level than necessarily Amazon. But nonetheless, these two kind of compete head to head in their retail section. Amazon has certainly other aspects of this business model. But Walmart itself is still expanding. They're getting into healthcare, which I can't really myself imagine going for discount healthcare. We'll just set that one aside. Amazon projected revenue, should the economy contract just somewhat, which is what the Federal Reserve is planning on, a small contraction, then moving forward. If the economy does contract somewhat, Amazon itself will see some decline in revenue. So I'm not so sure we're going to see these projected revenues hit. Gross margins, 47.6%, steady as she goes. Operating margins, 8%. This is pretty solid for Amazon. They're starting to make more profits trickling down to the bottom line. Net margins, 6.9%. Earnings per share, 94 cents, latest quarter. Projected earnings per share for 2024, they're looking for $3.40. Then it's a matter of rate of growth. Will rate of growth for revenue increase faster than previously to sort of justify where Amazon is on its price? Probably not. Maybe 25, 26, 27, we see increases in the rate of growth. But if it gets too high too fast, the Federal Reserve will probably step in with higher interest rates. So there's some give and take there. moving forward. But let's take that 339. Let's apply a little bit of math. Your current price of 147.50. The 2024 earnings per share for Amazon stock, $3.39. Real simple math. Take that, divide it over top of the 147.50. This gives you a shareholder, an Amazon stock shareholder, a yield of $2.29%. Basically, all the earnings you could earn in 2024 versus the price you pay today, your yield would be 2.298. Today's Treasury yield finished up roughly 4.05% for the U.S. 10-year Treasury benchmark. This is the benchmark where we look to and say, okay, that's the comparison. Given the comparison of your opportunity to get in on the Treasury at 4% versus Amazon stock with a yield of 2.3%, stock traders might want to look at other opportunities. There's a lot of speculation built into some of these stocks currently, but the thing is, the 10-year Treasury may actually move lower. Okay, that sounds like good news. Maybe it hits 3.75. But how did the U.S. Treasury benchmark get to 3.75%? The U.S. economy contracted. Revenues for companies like Amazon, which would affect Amazon stock, if those revenues start to contract, if earnings drop further, so does Amazon stock. So it's a give and take there when you're looking at these that yes, we're probably going to see interest rates slide a little bit, but that's because so is the economy, which means so are revenues for companies and profits, which would leave Amazon stock and Amazon stock shareholders holding a speculative yield at 2.3%. Taking a look at price to earnings ratio, this kind of really encapsulates it. 66.4% was the latest earnings per share ratio. That's pretty high. It's not even as high as it was previously. It's sliding somewhat because earnings are moving up a little bit, but Amazon stock itself is kind of moderating to the sideways. We'll see how that plays out over the course of some period of time. Regardless, when I look at Amazon stock, AMZN, the ticker symbol, it's too speculative at this price level. Revenue growth rate isn't high enough. Profits aren't increasing fast enough to justify today's price. With the U.S. 10-year Treasury yield likely to move lower, this also means the economy is contracting somewhat. Because of that, revenues will start to decline. We're seeing this. Walmart's numbers actually moved up, but then they sat there and said, yeah, that was the good news. Next quarter, not going to be so good. Walmart stock took it. These other companies are eventually going to say, yeah, so we didn't quite sell as much as we thought, and Amazon stock will sell. It's speculative at these levels. As a value investor, the 10-year is a much better value, plain and simple. Because of that, individuals, traders may move out of Amazon stock into something a little more safe, like the 10-year Treasury, which if that 10-year Treasury yield goes lower and they bought it today, that means those individuals made money because you would pay more for a higher yield. Make sure you hit that like and follow button. I'll keep you up on all the stocks. I use value investing and I base everything on the economy first and foremost. Hit that like and follow button. See you in the next video.